Hello, Mavericks. How's it going? This is Rob Reinhold. I'm joined by Mr. Ankit Sharma, and I cannot believe it is May. It's crazy that we're already through 4 months out of this year, but I got to say, compared to last year's Forex trading, this year's is so much better. It's so much better. I'm so happy that Forex trading is back. I didn't know if it was ever going to come back, and it is just awesome. And our traders are doing great. We'd love to see this kind of volatility. All right. Speaking of volatility, we've got the worst first 4 months of the stock market since 1942. We've got 4 consecutive losing weeks. It is a bearish market. Even the rallies that just happened, they all get sold off. That is the hallmark of a bear market. Now look, the hallmark of a bull market is just the opposite. Sell-offs get bought all the time. Anytime the market sells off, people just rushing to buy. This is the opposite. All rallies at this point need to be suspect. All rallies, you have to think, okay, these are going to fade away. Until we're proven different, we are in a bear market. Bond yields continue to march higher. The Fed continues to say they're going to be aggressive. The bond market is priced in 75 basis points between now and June, meaning that at least one of the meetings is going to have a 50 basis point hike and the other one's going to have a 25. We saw the dollar continue to stay strong. We've loved the dollar since it broke out about 3 weeks ago, and it just continues to be a great trade, paying us off. Australian CPI was hotter than expected in this big risk-off move. It's not really going to help the Aussie all that much. You know, the Aussie is a very cyclical currency, and even though it had higher than expected inflation, the fact that people are fleeing from countries that they deem are not as safe and stable as the US and Japan, then the money comes out of it. And a huge surprise, at least to me, and Ankit and I were just talking about this before we got on this video, negative GDP, negative 1.4%. We were supposed to get plus 1.1%, and that's a big miss. Now remember, the definition of a recession is 2 consecutive quarters of negative GDP. If the second quarter GDP comes out negative, that will be a recession. That will absolutely be a recession. So we'll have to see what happens, but this is the first one, and you can tell the market didn't like the fact that we have to now admit, wow, one more quarter and it's technically a recession. So let's take a look at the performances last week. S&P down almost 2%. The VT, the world index, only went down 1.5%. So we are seeing a little bit of outperformance from international. Crypto fell 2%, gold fell, and oil was super volatile and ended the week up. So let's take a look at S&P. Let's just take a look at the chart here. And you can see there's nothing good about this chart. After this rally, this huge rally off the bottom, we've been nothing but bounce, a little bit of rally, fall, a little bit of a base. Look where we are. We have been touching this major support level 3 times now over the past week. Every time it's managed to claw its way back, but it's just like when you put enough pressure on something, it's going to break. I think we get a break this week. I think we fall pretty hard. What's your call, Ankit?
I think this week is definitely a do or die situation. We are right at the support. And as we were discussing earlier, we are going into next week. And next week we're already seeing a lot of selling pressure here. So we're going to start off the next week on a much negative note. But next week is also the FOMC rate statement. So I think the next week would be a do or die situation for the markets. And if we do break that support, there's definitely more downside risk there. So the Fed is the only one that I think that could try to, save the markets a little bit here. But I think overall, there's a higher chance for this to break. But again, for any breakout, we need that confirmation candle, which we don't have that yet. We are right at the support. So we need that initial breakdown. And once we have a follow through, I think we have a lot more ways to go down than to go up. So I think next week would be an interesting week to watch.
Well, thanks, Ankit. If we take a look at the currencies, what they did last week, we loved the dollar. The dollar was our number 1 trade last week, and it was the number 1 performer. So nice call for everyone on dollar. And we called for the Aussie and the Kiwi to suffer, and you can see the Kiwi, which has been the weakest of the two, went down 1.1%. CAD. I want to talk about CAD because CAD to me is the one showing clear relative strength. If this was a normal distribution of when the markets went down 2 to 3% a week, this would look pretty normal. The US and Japanese yen, the strongest, the European currencies in the middle, and the Aussie and Kiwi, the weakest. Now, typically we see the Aussie, Kiwi, and CAD the weakest. So everything in this chart fits what should have happened except for one currency, and that's this one. This one really should have been down this week, and it wasn't. Now, we've liked CAD to the long side. It's shown some great relative strength. This is the currency that if we do get some sort of bounce, I think this is the currency you want to be long. And if you take a look at Aussie and Kiwi, you can see that the Aussie's been stronger than the Kiwi. So if you don't go long the CAD, it's long the Aussie. However, that's only on a bounce. I don't think we're close to a bounce at this point. So we're looking for more risk off. So we continue to like dollar, yen, Swiss franc. Risk off is not good for cryptocurrencies. I've read a couple papers where people try to write that, okay, no, cryptocurrency is going to be somewhere where people flee for safety. Okay, though the problem is it's highly correlated to equity returns. And so you're starting to see, as equities come down, this is considered a risk asset. So it's just not the right environment to be long cryptos at all. You want to be short cryptos if you can. But again, I don't see any reason. This is exactly what is likely to continue to happen if the market goes down. So if we take a look at all the analysis of the markets, we already took a look at the SPX. So let's go ahead and check out the VT. This is the Vanguard Total World Index. And same thing, we are right down at these lows. It is just looking really dicey here. If we break below it, it's definitely a very bearish market. So when I'm looking at this, we were already in -2. I'm going to a -3 for this week. Very rarely do we go to a -3 or a +3. It's really maybe once or twice every single year that we have these extreme readings. And that's where we are right now. But let me say, when you get to a +3 or a -3, those are where reversals typically happen. This is where the capitulation moves are. These are +3s. Those are what are called blow-off tops. And -3s, these are called capitulation lows. So I think we're going into a stage here where the markets are going to really come apart and crumble. There's going to be yelling on CNBC. Everyone's going to get hysterica. And then at some point, it's going to bottom up and probably have a pretty good bounce. But we are nothing but bearish here at this point. If we take a look at cryptos, again, there's just no reason. Everything's below moving averages. Moving average, this 20 has been resistance. There's some support down here, very highly likely to break. So cryptos just don't look good on charts. On the calendar for the week, we have a ton of news this week. It is the first week of the month, which always brings us a lot of reports. But this week, wow. ISM in the US on Monday, and then we got the Bank of Australia on Tuesday. Now look, Tuesday at 12:30 a.m. That's Monday night to all of us in North America. So Monday night is the RBA rate statement, and we're going to be meeting live for a live trading session about 15 minutes before that announcement comes out. As you can see, we also have Kiwi with employment report. That's going to be a mover here on Kiwi. Now, looking at where we are in the market, I don't think you want to be long Kiwi, even if it's a good number. I would actually rather sell that rally. If, let's say, employment comes out, it's a good number, and the Kiwi gets a little bit of a rally, I would definitely be looking to short that rally. As long as this risk-off move is happening, there's going to be a lot of weight on these Aussie and the Kiwi. On Wednesday, we have the Fed. The question is it a 50 basis point hike? The market is saying, yes, that's what we are expecting. Oh, sorry, I forgot to say, we are looking for the first rate rise out of the RBA from a 0.1% up to a whopping 0.25%. The U.S., look, if the Fed doesn't go 50, the market may be happy for a little bit. But again, I would sell any of those rallies. On Thursday, we've got the Bank of England. So we have 3 central banks this week also raising rates. So we're seeing this continuous stream of raising rates, quantitative tightening. It's not going to change until inflation comes down, and we haven't seen any indication that that's happening. On Friday, we had the U.S. employment report. Well, the U.S. and Canada will be meeting live for that one as well. So again, live trading session for that one. Come join us. We'll take a look at some trades, see if we can find anything that's good. So to wrap up kind of what we're looking at this week, we've got lots of central bank talk. Tuesday, Wednesday, and Thursday. Major announcements. And we have an equity market that is really coming apart at the seams. This is a really good trading environment. Understand, an environment like this brings volatility. And all volatility is big movements up and down. Now, big movements up and down can be difficult for traders, especially as stops get triggered. What you need to understand is that just let the stops get triggered and then re-enter, or we can do what we do in our pyramiding, where instead of taking a 1x position, meaning, hey, I was going to buy $100,000, the initial trade is a $50,000 trade with a twice as big of stop. It's the same dollar amount of risk, but now you're allowing your positions to move, and then when it starts to move your way, then you add on the next 50 and then the next 50, and you pyramid up to make a nice profit. Pyramiding is going to work really, really well in this environment.
Hey, Rob. Well, I actually also want to add up to the outlook here because, if you take a look at the markets, and I think this is where we have seen a bit of a contrast this year. And if you look at back in February and March, those were the last time we got the new lows that we made, and markets were a lot more bearish. The currency markets were a lot different at that time because what we saw at that time was a total disconnect from the regular correlation that takes place in the markets. We had dollar didn't really spike at that time. Things were kind of muted. We had Aussie, we had the Kiwi running. So we actually saw the disconnect that took place there. I think this time around, we are seeing the opposite. There's a whole lot of volatility that we are seeing in the currencies, both on the both sides, back and forth, because now correlation is actually coming in play. So whenever we see that correlation in play, this is where more volatility, more opportunities, and more back and forth price action. And again, we already seen Aussie turn lower, Kiwi turn lower. All of these currencies were actually doing really well last time back in March. So I think one thing to pay attention to here is that the correlation is also coming in play, which again makes a great market environment because you get that help from the markets and everything is kind of moving in a single way direction. So I think going forward, especially the next couple of weeks, we need to pay attention to that correlation because we are seeing the correlation going back in play. Back to you, Rob.
And Ankit, you know how I trade. I'm very happy when we have the market correlations. And for those of you that don't know what that means, that certain things happen when equities are very strong. There is a correlation of what currencies are going to do in an up move. But there's also even stronger correlations to the downside. When there's a risk-off move and people are panicking and pulling money out of assets, there is just another wave behind the usual amount of buying and selling that's going on, where big swaths of money are just running towards the exit. It just makes the trading bigger and better. The trends are more consistent and they last longer. So I'm very happy about it. Let's take a look at each currency one by one. I'm going to go very quickly through cryptos here because there's not a lot of good to say. We're breaking lows. We're at lows. We've got, support down here in Bitcoin at 37.5. I don't see any reason why it doesn't break that. It just not looking like anything. As I said earlier, these are positively correlated with equities. And when equities do well, like when equities did well over here, you saw the rise, and when equities fall, you've seen the fall. I don't see any reason why this doesn't break down. So Bitcoin Cash, negative on that one as well. Ethereum is holding up. Look how much better it's holding up. It's actually really close to its 20-day moving average. That's amazing. I just can't get excited about buying it. All I can say is, hey, Ethereum is holding up the best. When things do turn around, it's going to be the best one to buy. But right now, it's not a touch. And then here we are, we see Litecoin. We've said that Litecoin is looking like the weakest of all of them. And you can see Litecoin is likely to be the first one to break down to new lows. So cryptos are just, again, if you want to go long, you just have to wait. If you want to go short, go short. Let's jump over to Forex here. And let's start with dollar. And we talked about when the dollar broke out. And if we could go back a couple months, we were in this channel for months since the first part of January. When we broke out, you could see we've had one down day other than today. We've had just one down day. Every other day has been a really nice candle, open at the low, close at the high, open at the low, close at the high. These are really consistent trends. You don't get stopped out of these. These just keep going and you can keep riding them. Yes, it's had a big run. Yes, it's far away from moving averages. It will pull back to a moving average at some point. But right here, right now, it is cranking. When we take a look at where it is on a shorter term chart, 4 hour, we can see it's pausing. It's taking a break. It's taking a little break short term here. I think you want to be looking to buy this break. When it does finally break out, and that might be Sunday, Monday, Tuesday, I don't know when, but I think that's when you want to be looking for an entry on dollar. Yen has been resurrected. The yen has been so weak for so long and hadn't responded at all to risk off. Usually the yen is the best performing currency in a risk off environment. And it's been totally just getting slammed and killed. The Bank of Japan has just been taking it out and killing it. The risk off got so strong that the yen finally responded. I don't love yen here. I just don't love it. It may end up catching an even bigger bit than the dollar, but I'm not going to bet on that. For me, I'm just going to be a spectator on yen. And if we do get a bounce, I'm going to short yen. Short yen on the bounce, I think, is the play, but I don't think that's till late in the week. Anka, what do you think about yen?
I think yen is an interesting play here. And again, one of the things that we do notice is that, there's been a lot of bearishness, and then we got this nice little rally last week, and then we got a new pullback here. So I think the yen really could go either way, but yen do carry a lot of risk in the sense that it goes up pretty fast and it's going down pretty fast. So you have to be really fast with changing that outlook there. Again, we are getting nice velocity moves. But now as we look at the trend, I think it's getting less bearish. So I will definitely hold off to being super bearish to yen. I think especially in this current environment, yen could benefit to go higher. So I think what we need to take a look at is the previous high that was established on April 25th or 26th. If we do break above that will be a confirmed trend changing move. Until then, I think I'm better off not trading this or be on the sideways there. I think that's the hallmark that I'm looking at, because that would establish a higher high with a higher low, and a move higher would create a good move. And especially how far yen has come lower, I know there's going to be a lot more activity there as well. But like I said, I think it do carry a lot of risk, and we saw it already this week. Monday, Tuesday, big move. Wednesday and Thursday, pull back huge as well. So overall, the trend might not be going anywhere, but what we are getting is big velocity moves. So I think that's how I'm taking a look at yen. It might not go anywhere, but I think we'll probably get these big velocity moves on both directions. So caution definitely in the Japanese yen. But I do like the velocity there. So I think, and I had this question early this week as well, is if the trend score is 0, should I still trade the velocity? I think this is where it's just short-term trading versus trading with a trend. I think there's going to be some moves in the shorter term and might not go anywhere. But I think that's where the movement in yen is likely to be.
Thanks, Ankit. Over to the Swiss franc, 0, 0. So just zero it out. It hasn't done anything. I mean, it's got no velocity right now. It's not doing anything. There's no reason at all to try to make a trade here on Swiss franc. We'll come back next week. If it's done something, we'll talk about it then. Euro, same thing. We've got just going nowhere. We are low basing here. So, we'll see. We'll see what happens. But I think Euro and Swiss franc go on the back burner, back shelf. We'll take them out next week and check them out. The pound, the pound was really trying to rally. It really wanted to turn around and be a superstar. And nope, the first of this week, it crushed and made a new low. So we had been fairly constructive on the pound, but we said we need more confirmation. We need it to move up. We needed to start seeing higher highs, higher lows. We definitely did not see it. So we're back down to, okay, pound is likely to go lower. It's in a clear downtrend here. We did get a really nice candle here on Friday. I would actually be looking to be a seller of pound really at the first of this next week. I like it nicely for a short. That being said, it's got more momentum to the upside at the moment. So we need to let that momentum die off, start to get some velocity to the downside before we trade it. The CAD is one of our favorites, and you can see we have just been running and basing. So we just broke out of a 6-day base. Now look, Friday's candle wasn't great. Not a great candle. I don't see any reason why that changes anything on the technicals. We're still having a nice run, a nice breakout. So it's just a little bit of a pause. I think you want to wait and buy this when it turns around. I do like CAD to the long side. Aussie had a clear uptrend for a long time, and now we're seeing some really big signs of distress. Technically speaking, this is not in a downtrend yet. It's close. We have a new swing low, but really what we need is moving averages to start to tip down, to cross. We need to see a clear break of a 50-day moving average. We're not there yet, but we are definitely likely to see that at the beginning of next week. Remember, we do have RBA on Monday. This one is going to be a mover off of that report. When we take a look at Aussie and Kiwi, we can see the clear weak one is Kiwi. So I think if you are looking to be short one of the two, focus on Kiwi. It is absolutely just heading lower. We've already broken below those. We're about to get across here. So all the things we wanted to see on Aussie to give us a green light to go short, we're already seeing those on Kiwi. So I do like Kiwi short. It was my favorite short last week. It's my favorite short this week. So when we rack them, stack them, dollar CAD are the only currencies to even look at buying. And on the short side, cryptos look terrible, and the Kiwi looks the weakest. And again, Aussie yen, maybe, but really, it's pretty focused here. Short Kiwi, long dollar. Short Kiwi, long CAD. That's going to be the pairing here on trend score. Velocity score. Now again, we want these to match up. We want them to match up to where the trending ones are trending nicely with good velocity. Here's the problem. Our strongest currencies, dollar and CAD, aren't showing a lot of velocity at the end of this week. They had nice runs at the beginning, and they've kind of faded off at the end. So we're going to start next week off patient, say, okay, these could fade off a little bit more, but we want to be looking to buy those when they strengthen. The Kiwi looks shortable now. It looks shortable now. We don't have to wait for that. We're just waiting for, okay, what do we short the Kiwi against? I would love to short it against dollar, but I need dollar to show me a little bit of strength before that. So pretty easy, pretty narrow board here this week. Dollar and CAD long, Kiwi Aussie short. Let's go ahead and look for some possible trade setups. So pretty, like I said, pretty narrow range of what we're looking for. First up is going to be Kiwi dollar. And I'm going to start this out on a daily chart. Actually, you know what? Let's be crazy this week. Let's go out on a weekly chart. All right, now we're looking at some really long-term trends here. And you can see all the way back to 2018, we had this long downtrend where Kiwi weakened against the dollar, and that was mostly Kiwi. That wasn't strength in the dollar, it was mostly Kiwi weakness. After COVID, we got a big rebound. Now, take a look at where this was. This was down at 55. That was in the height of COVID, but even before COVID, you could see here that 64, 65 was about what it was worth. You can see we're really coming down hard here. We got a lot of velocity. Now remember, whenever something's a -3, it's telling you it's pretty close to the capitulation where we do get a pretty significant bottom. We saw this over here in January. You can see we got really, really big red candles, and then we got the significant bounce. I do think we are a week or two away from a very significant bounce, if maybe even a day or two away. If the selling is really nasty on Monday, Tuesday, we could be close. But for right here, right now, I think you have to be locked into being on the short side. So weekly chart showing weakness, daily chart showing weakness, 12-hour chart showing weakness. So everything's showing weakness. The big question is, where's the entry? Where's the entry? And we talk about how we like to grab entries on rallies. Rallies here, rallies here, rallies here. We just had a fall. We need to see, okay, we would like to short off of a base or a rally. So it's not quite there yet, but I think early next week we could be. Boy, yeah, this hourly chart is just, look at this, just no bounce here at the support. It should have really good support here, and it's just not able to get anything. So starting the week off, Kiwi dollar is my favorite. Kiwi CAD, my second favorite. We are seeing a little bit better price action for an entry point here. And mostly this is because CAD was weaker than dollar on Friday. But you can see here we broke to a new low. So we had a clear low base that was broken. And we've now rallied back up to this point. This is a very shortable place. With that being said, we're still seeing more momentum. So we want to wait until we get a red candle to where we now have confirmation that, okay, the momentum has switched. But I like this one for a short. Any trade you want to take a look at, Ankit?
Hey, Rob, I think we're looking at along the same lines here. Again, we have been looking at these Aussie CAD, Kiwi CAD, and they were kind of worked out well in the past few weeks. And overall, I think a lot of the yen crosses that we can take a look at, that's where the focus is going to be. But I just want to point out that this week is a very heavy loaded week when it comes to news events. So this is where things could change really fast. And I know right now we have a much clearer outlook on the markets being very bearish. But I think as we go in next week and we start to get these events out of the way, we'll have a much better idea where the market's going to go. And especially Wednesday, I think one thing to take a look at right now is strong dollar is really weighing down on some of the currencies like Aussie and the Kiwi. So dollar is really the key play here. So I think dollar is the one that we need to pay attention to on a Wednesday for the farm series decision. The big question is the dollar running into the event? Are we going to get a bit of a buy the rumor, sell the news? And if that's the case, I think I like some reversal second half of the week. But again, that's only if we start to see some reversal signs in markets and the dollar. If we see the opposite, I think then we probably see further continuation in these dollar crosses. So I think this next week, I'm very flexible on moving one or the other side of the markets. I think it could start with a -3 and go end up with a +3 again. Who knows? But I think being flexible in this kind of market condition is really important. So that's what I'm looking at, Rob. If you want to take a look at pair, the only one that really stood out to me was Euro Aussie. I know if you take a look at Euro, the trend score is not strong, but if you start to take a look at the shorter term 4-hour chart price action to see, is this trying to reverse a little bit here? And it seems like it's trying to reverse out of that downtrend, and it's having a nice little follow through here. So what we have seen in the past is that we get these sporadic runs in euro, and that kind of turn down after that run. So the question really is that, is this a movement that we saw today has any sort of legs behind it? And if it does, again, that's something we can take a look at in conjunction with the dollar and the yen. But right now, because there's so many currencies that are moving, it's important to take a look at the velocity and see which one to focus on. Like a day like today, even though dollar has a good strength score, but the good plays were really in the euro and the pound crosses. So that's what I'm looking at, Rob. I think it will be a good week next week.
Yeah, thanks, Honkit. And I want to just take one look at euro dollar because we are down to levels we haven't seen for a long time. And I hadn't heard anyone talk about parity with the dollar yen for, 2012, 2013. We're getting down to the $1 area. And you can see this is where we were at the depths of the crisis over in Europe. This right here, this was the depths of the crisis in Greece and other countries. You can see we're down to this level. This is fairly crisis levels here. We could break below these levels. Now, we just had a big run from 110 down to 105. I would expect there to be a bounce in there before we break, but it's just very interesting to see where we are when we take a look back in history through all the years and say, oh, we're at some pretty extreme levels on some of these key currency crosses. So something to definitely just keep in mind. I'm not saying this is the great trade. I think there's better trading pairs out there. But as far as just to show you where we are in the cycle, we are at extreme lows. And when we get to extreme lows, you are typically close to reversals. Like, I am not calling the end to a bear market. I think we do go lower. I think this bear market has got some more legs behind it, especially technology stocks. But when I see extreme readings, I have to tell myself, hey, Rob, there could be a significant bounce somewhere in the near future. So keep your eyes open and watch for it. But until then, you want to stay bearish.
Hey, Rob, I think on that note, I think it's also good to take a look at dollar yen as well, because it's the same story that's actually playing out in a lot of different pairs. Just like the euro dollar hitting those lows. I mean, look at dollar yen. That you had to really, really zoom out to know where we are, and we are at levels that we haven't seen, I mean, for the longest time. And I think this is where we start to have that conversation, like how much can it go further? And you can see that thing has, I mean, I had to go back in like 90s to see like, okay, what the highest dollar yen was. But you can see the next level of resistance on dollar yen is really come around that 134. But again, be huge levels to that it has cleared. And again, one of the things that also pay attention to is that once we get past those milestone levels, you see that's where we're getting that big acceleration. So the dollar yen is another one. I mean, look at the range that we have onto the upside. But until then, I think this could be another trade that could probably just continue running until it runs out. But let the chart tells you that, instead of trying to get behind or trying to get in front of a moving train, as we like to say. Let the chart tell you by reversal signs or signs of slowdown and sign of a different sort of price action. But till then, just stay on the right side of the market.
Let's wrap this up. We've got the markets testing the March lows. We think there's going to be a break below those. It could get serious. We could get some serious selling in the early part of next week. And again, I'm going to say this one more time. The more intense the selling gets, the more you have to have your spidey sense that, okay, this is typically where reversals happen. If we don't have intense selling next week and it just drifts lower and falls lower, that's like the worst case scenario for the markets, because it's going to drift lower to lower until it finally does have its big flush out. So if you are bulls, I think what you want to see is you want to see a really ugly day on Monday, Tuesday. And I know that's crazy if you're bullish, but that's probably your best hope, because if it doesn't do that, this market is going to just keep drifting lower. As Ankit said, a very busy week this week. We're meeting on, again, Monday night, Tuesday, for real, at least East Coast people. We're going to be doing a live trading session on the RBA rate statement. On Wednesday, Our midweek update is typically at 1 p.m. Eastern Time. However, because of the FOMC meeting, we're bumping it back 30 minutes so we can meet, go through some things, and then have a live trading session on FOMC as well. And then on Friday, we're going to be trading live through the US Payrolls Report. Come join us for a live session there. We'll look at trade setups, we'll make some trades, and we'll try to make some pips. As always, this game is won and lost with proper position sizing and proper risk management. And as Ankit mentioned, and I will confirm what he said, focus on the velocity. Find the pairs that are moving now. Find the strength and weakness now. Thanks, everybody. Everyone have a great weekend. Take care. Goodbye.